Paul Rosenblum is a bookkeeper, not an accountant or a CPA. Although the information in this podcast comes from professionals, it's meant to give you enough knowledge about these subjects to have a meaningful dialogue with your tax preparer about bookkeeping and taxes.
It has gotten very busy for me recently, and my end-of-year adrenaline that I've spoken about before is just beginning to kick in. Not every hour of every day yet, but I can feel it at times during the day starting to run through my body. I am starting to feel the pressure of the first workday in January and knowing that I have 1099s to do after all the bookkeeping for my clients are done for 2025, at least on the expense side of things. So I'm working hard in cleanup jobs and regular monthly bookkeeping, prioritizing carefully as I go. I take breaks during the day to check your emails to bookkeepermensch@gmail, as well as keeping up on my regular email and read and answer anything that I have to during that particular workday. And the other day, I checked email and there was a notice of fan mail that a listener sent in. As I have announced, the Q&A season will be starting soon, but the question that I received is such an important one and is at the crux of what bookkeeping is, in my opinion, along with relationships from the bookkeeper to the clients, that I decided to answer this question in full detail in this one episode. So let me turn up my passion for this subject. This will be an educational episode for bookkeepers and maybe an eye-opening episode for some small business people who think of their bookkeepers as data entry people that I've talked about before. Because the listener didn't leave voicemail, my podcast production and growth guru, and what I call my producer, Steph, is going to play the part of Katie, the listener who wrote the fan mail. A special thanks to Katie for asking this and writing it so well. And here we go. I'm Paul Rosenblum. Here's Katie, channeled through Steph. The mic is yours.
Thanks, Paul. And remember, everybody, you can leave a message like this so you can be a part of next season, season 7, starting in 2026. And I'm recording this on my phone specifically because that's probably what you'll do when you leave a message for Paul. Okay, here's Katie's message. Hello, I am a somewhat beginner bookkeeper. I have listened to your podcast to gain some better knowledge. I started as an employee who just completely followed the direction of my employer for how he wanted to classify his expenses. Then, recently, a family friend asked me to do his books as an independent contractor. Here are the questions I have for you. How do you handle it if a client submit their personal expenses, business expenses? Do you argue with them on it or trust their assessment? For instance, my employer has many vehicles as part of the business. Because there is always a large expense account for vehicles and fuel, I noticed that he and his wife appear to put every personal vehicle expense on the business credit card, which is only obviously because his wife does not do much with the business, but has a quote-unquote business credit card that is usually mostly fuel. Because I am their employee, I do not push them on this, but I am curious that if I get more clients as a bookkeeper, is this something I would question/fight them on if they insisted it was a business expense?
As an independent bookkeeper, I, most of the time, know when a client is telling me that something is a business expense that really is a personal expense and not deductible in the company's taxes. This comes together with something that I've been talking about for a couple of years now, relationships with clients. The more you know personally about your clients, the more you can pick out the personal expenses from the business expenses. The bookkeeper just has to pay attention. And by the way, can AI do that? For one example, I have a client who lives in Indiana, so when I see expenses from there, they are probably personal expenses, but maybe not 100%. I do ask. When I used to meet face-to-face with new clients, and now face-to-face on Zoom calls, I set the ground rules. I want every one of my clients to understand how I work, how much passion I have to get things right, and to understand the relationship that a bookkeeper has with a client and with their tax preparer. I will tell the client that I will enter every transaction, even if I have to look things up to see what kind of store or website or service that they purchased, to see where that transaction should be recorded in the chart of accounts in the books of the company. At the end of each month, I will also send them a spreadsheet of all the transactions that I just wasn't sure of. In your case, Katie, the client says that they have many vehicles that they use for business. The first thing that I'd ask as a bookkeeper, and I would ask strictly for business purposes so that I can do my job properly, is for all the paperwork on the purchase or leases of every vehicle that they claim is being used for the business. I tell them that leases and purchases are dealt with differently in business, and they can actually save money on taxes if these vehicles are properly input in the accounting system. Once you get the paperwork, you will see exactly how many leased vehicles and how many purchased vehicles the company has. You will also see who the paperwork of the leases or the purchases are made out to. If everything is in the business's name, then the purchased vehicles will end up being assets and the lease vehicles would be expenses. And even the model of the vehicle could get an additional depreciation expense if it's purchased by the business. That can save more money, in some case, thousands of dollars for the taxpayer. If, however, the vehicles are in the owner's personal name, the deductions are figured out by the tax preparer in a very different way. It could be figured out as a percentage of total expenses for said vehicles. So if it's 80% used for business and 20% personal, then every $100 spent on gas would be split between the business and the personal vehicle expense, which would be counted as an other expense. $80 would be a business expense, and $20 would be a personal vehicle expense. Or the total vehicle expense of a non-business owned or leased vehicle would be adjusted just once at the end of the year by one adjusting journal entry. The other way is based on mileage. For each personal car, the client would have to keep a careful mileage log, and based on that, the IRS will allow the business to pay the owner non-taxable money based on the total business mileage for the year. So getting the paperwork from the client lets them know that you know what you're doing and also that you want to do things the right way. It would say a lot about a client if they don't want to give you that paperwork. At that point, you would have a right to walk away, citing that you have a reputation to uphold. Family friend or not, they are paying you to do their bookkeeping, not just data entry. Bookkeeping. This is why it's so important for bookkeepers to know something about taxes so that they or we can book these transactions properly for the tax preparer. So, one answer is that you, as a bookkeeper, can push the client or family friend and let them know that you want to do things properly. But here is where it could get a little tricky. The tax return that the tax preparer submits to the IRS is the tax return for the client. We, as bookkeepers, don't sign it. Hence, there's no legal liability unless the bookkeeper themselves commit fraud. The taxpayer and the tax preparer sign that tax return. If there is any fraud on the tax return and the tax preparer doesn't know about it, then they are safe. If the client, or the bookkeeper for that matter, tell the tax preparer that there are personal expenses in the books and the tax preparer leaves them as is, then if they are ever questioned during an IRS audit, it could cause a problem for them if they tell the truth that they did know. It puts them in a difficult position. So, one way of handling this situation is the entries that you are entering as business expenses directed by the client. You can copy and paste a memo or a description in each transaction that says per client or per client instructions in it. This takes all the pressure off of you if ever looked at by the IRS during an audit. If the tax preparer goes through detailed reports, they will see that, and then it would fall to them to talk to the client about moving these transactions, or not in many cases. There are many accountants who will question the bookkeeper, and if we tell them that they are personal expenses, the tax preparer will adjust and remove them from a deductible expense, sometimes even without telling the client. And the client will probably never know. I have very few clients who actually can read a tax return. But us professionals sleep better just knowing that it was done right. But at least you are out in the open about it. I have done that from time to time with difficult clients who just insist that what I know are personal expenses, they want in the books as business expenses. The other way of dealing with transactions like these is just to confront the client. Let them know that part of your job is to protect them from audits. An audit might cost $1,000 a day just for the tax preparer to represent them at the IRS offices. There are so many other ways to save money 100% legally just by using the IRS code. And we don't have to cheat with a few hundred or even a few $1,000s of gas for vehicles, for one example. I have told clients that I will not count certain transactions as business transactions if I know they should be counted as a draw or distributions from within the company. It's a very different situation if you are an employee of a company receiving a W-2 at the end of the year. Your employer has the right to tell you what to do and how to do it. But as a subcontractor, you are or should be treated as a business, the same as any service-based business, since you are a business. If you need a plumber, you don't tell the plumber how you want the pipe fixed. You just want it fixed properly. There is no difference with bookkeeping. So as a subcontractor, you are the one who should be in control of how accurate the bookkeeping is, not the client. Then let the tax preparer do their thing. Now, we all have a different style, but I will explain just that to every new client who I start with. I'll tell them that they are the bosses of their companies, but I'm the boss of the bookkeeping, which usually gets a smile, if not a full laugh. I'm here to take the pressure off of them and to do the bookkeeping properly. That's why they hired me, or any bookkeeper. If they push back at that, I know that I should not take them on as a client. You can probably tell that I'm pretty passionate about this subject. I knew that I needed to know more than the client does about bookkeeping and taxes from the very beginning of my career. At the very beginning, I was a very small step ahead, and now I'm about 3.5 miles ahead of my clients, probably more. So if I get pushbacks from a client about how to categorize something after 30 years, I can easily threaten to walk away from them and their businesses because I still have an overflow of clients, although not as much as I once did. In your case, Katie, I'd be friendly and professional, but let them know that you want to do things properly and they need to work with you and not against you. You are both on the same team. They might just thank you later.
Let's take a quick break.
Here's a special announcement. The Q&A episode was so successful that we are going to devote a whole season answering just your questions coming up in the new year. So go to the website and leave a voicemail with your name, location, and question, and it could be used in its own episode. Start submitting now through December 20th, 2025. I also have been receiving fan mail recently. Thank you very much. But please remember, include your email so that I can get back to you personally. Or copy the fan mail and send me email directly. Thanks. And now for this episode's tax tip. This is the time of year that people start a new business or create a new entity. If you want to create an S corporation, keep in mind that when you create a corporation, it is with the state. It defaults to a C corp. So to let the IRS know that you're filing as an S corporation, you have to file the IRS form 2553 to elect to file the C corp as an S corp. You should allow at least 2 months for the IRS to approve, although it could take much less time. And now for the second part of Katie's question.
My other question is, how often do you bug clients for details about their purchases? Sometimes the bank statements can be vague, but I don't want to constantly be bugging my new quote unquote client about what every single purchase is. Obviously, things like gas stations are easy, but sometimes businesses like Walmart purchases can be anything. Do you ask your clients about all of these line items? And do you require receipts? Thank you for helping this newbie out. Katie.
At the end of every month, I will send the client a spreadsheet of all the transactions that I don't know how to categorize. I create a column for them to type in their answers. Starting around now in November, I will start to send profit and loss details spreadsheets for the entire year, if small enough, or month by month, as to not overwhelm the client with too much data. I will have them take a look at all the categories, all the transactions in those categories, and then, for as many clients as I can, get them to send me an email approving of all the categories and where the expenses are booked. If they want any expenses moved to another category, if they make sense tax-wise, then I have no problem making those changes. If I have a payment in cost of goods sold subcontracted expense, for one example, and the client would like that transaction to be in an advertising expense, since that subcontractor is a marketing person, then yes, it makes sense, and the tax deduction either way is 100%. But if they want a subcontractor to be moved to an expense that makes no sense during a possible audit, like an office supply, then I will tell them that I won't move it for possible audit reasons. I always tell all clients to keep receipts in case they do get audited, but I don't need to see them personally. If I were working at their business physically, then yes, but the logistics in getting every receipt to me to do the bookkeeping from is very time consuming. I do explain to the client that the tax return belongs to them and not me, and the answers that they give me when I do ask questions should match the receipt that they save either on their computer, on the cloud, or by binder clipping the paper receipts together with the bank or credit card statements. Bugging your new client about transactions, in my view, is just letting the client know that you're passionate about getting it right. I've said it before and I'll say it again now. bookkeeping is not just data entry. It's bookkeeping. Double O, double K, double E. The first year with a client, I do bug them a lot as I explain to them that after the first year, and I see the pattern for the previous year, moving forward should be much easier. And yes, it usually is. And yes, Walmart, Target, Macy's, and even the 99-cent stores could be one of many categories in your chart of accounts. So yes, you must ask the client. I do the bookkeeping from credit card statements and from bank statements. Hence, I don't need physical receipts unless it's a big purchase or a loan or an affirm payment, which I talked about on the last Q&A episode. This is why there is much back and forth between us questioning transactions, at least for the first year. Always some back and forth, but much less in year number 2 and year number 3 and moving forward. A good bookkeeper, in my opinion, should probably be a type A personality, friendly but strong. Bookkeepers should be in control of things. Our job is to prepare books that are as clean as possible for the tax preparer. 95% of my clients are single member LLCs with no payroll. So payroll is only a small issue for me. And when it does come up, I'll mostly leave that to the tax preparer, which is why I concentrate on the tax-based issues. I don't make decisions on distributions versus shareholder loans for S Corps, for one example. That's up to the tax preparer, him or her. However, the profit and loss for me is number 1 on the priority list. Then I go through the balance sheet. Fixed assets are the most important so that they are set up properly to be depreciated by the tax preparer in whatever methods that are available in that particular tax year. And then I make sure that all balances on the loans that the client owes are all correct. If they are not, something on the profit and loss might also not be correct, since they are related. Loan interest is just one of them. This whole process also depends on whether the client ever even looks at their books. Some of my clients never look at the actual books, they just look at their bank accounts. The books are for the tax preparer, so that's when us bookkeepers need to not only have an open dialogue with the client, but with the tax preparer as well. These are decisions that each bookkeeper has to make for themselves. How are you going to deal with clients who think they know more than you? How do you deal with clients who just want to do things their way, even though they hire you and pay you as a subcontracted service? How do you deal with clients who want to enter transactions in the books and still call you their bookkeeper? Online accounting opens up questions like those. I'm their bookkeeper or I'm not. I don't share well or play with others well. I never did, so why start now? My rules as a bookkeeper. This is what I'm paid for. If a client wants to move on and work with someone else, that's okay with me. I say this because, Katie, you are a beginning bookkeeper. Think about these ethical and business questions at the beginning of your bookkeeping career. Moving forward will be smoother, and the foundation of your reputation will be solid. Since I was interrupted all day with phone calls, meetings, and podcast work, I'm going to smoothly start doing some work and get some bookkeeping done. I'd love to hear back from you, Katie, but remember, please include your email. And a thank you to Steph for playing Katie's part today, and for everything else she does for me and this podcast. I'm Paul Rosenblum.